another episode of Pure Perspective. This is the weekly update. I'm Clark Alexander. I'm with Gary Pierce. How you doing, Gary?
Doing great.
Reminder, hit that subscribe button, smash that like button, leave us a comment. Would love to hear from you. This is the weekly update for Monday, October 20th. We're getting closer to Halloween. Gary, do you have your costume picked out, or are you wearing it now?
Potentially no on a, potentially yes. This is probably what I'll end up with, but no, I don't have a costume.
You have your pillowcase ready for all your candy?
Yeah, I try to this time of year. I'm not good at Halloween.
No, not your jam?
It's not my jam.
Well, I can tell you, when you got 6 and 8 in the house,
it's their jam.
It's their jam. They're
Get
all
on board.
In.
Yeah.
The countdown is on. They're like, where's my little pail that I'm going to gather all this candy that Dad's going to sneak away from me? Wait, what? Was that out loud?
Oh, yeah. Yeah.
They know that I'm on
I'm going to let Taylor
cup.
know the secret.
Yeah. They got to hide the Reese's cups because that's what I come for. I will snoop through there, get me a Reese's cup. Whew.
I love it.
Twix.
Maybe it's
so. What's going on? What's going on in the world? What's the latest? What's the greatest? We're still in a shutdown.
Yeah. So the big stuff news wise, the shutdown still going on. No insight there really. The second is the tariffs. You know, China and the U.S. are still banging heads and not playing friendly, but we'll see how that goes. I think for, as it relates to a market update, things have, from the last time we talked, gotten a tick better. Not much, but better. We're going in the right direction, right? Like, we're going, things are moving downward. So high fives are slowly but surely coming into play. Might get it by the end of the year, might not. Depends
15
on
year. We're seeing, any 15-year I price with, good credit, good income. We're seeing, the number 5 is the first number. So it's certainly a good indication.
Yeah. And I think, on the rate card, 5s are there for, if you want to buy down, if that's what you choose to do. But again, still, low 6s, on purchase, refi, that sort of thing. I think, looking back over the last year or so, it's been a while since we've been this low. So, if you're in not everybody's in a position to refi, but and that's why I think getting that mortgage plan in place is important. Kind of understanding when is the right time versus, because these windows open and close quickly here over the last couple of years. Like, we've dropped down and then boom, something happens, it shoots back up. So it's important to engage on that mortgage plan, whether you're ready to do it or not, at least know when the right time to do it is. And I think that's important. But I think,
I would say the people that we're having refi conversations are most of them are cash out, just because a lot of people are sitting on low 30-year fixed, but they really, they're coming into it pretty blind as to where they need to be for it to make sense. So I think, you bring up a good point. It's like, let's have that conversation now. We're not sitting here saying we're going to force you into something. Let's understand what number makes sense, what you're willing to absorb from a payment standpoint. And, I agree on the windows. Like, let's understand where we need to strike. So when the window opens, we're prepared to strike. We're not starting from square one saying, get your application in, gather your docs. Let's get dialed.
Yeah, absolutely. I think that's the right message on refis. Every situation is different. It's not like during the refi boom where it's like a no-brainer, right? Yeah. Oh, I'm going to go from a 4 to a 3 or 2 3/4. Like, I
don't need to see the math. Let's go.
Yeah. In this situation, it's more each individual situation depends on a number of different factors. So it's just better to have that conversation up front. That way you can be flexible when and if the time is right to do a refi. And I mean, if you're north of 7, you should be thinking of it. You should be having a conversation. I'm not suggesting that 7 is the number that you need to be as far as like, hey, refi today. But if, seven and a quarter, 7.5 probably are in the money.
Yeah.
From a rate and term refi
Yep.
perspective. Um,
And we'll help you
Seven's going to
walk
be,
through,
yeah,
when it makes sense, right? Like the cost of
absolutely.
obtaining a rate and how much money you're going to save per month. Like,
Yep.
hey, if you're going to be in the house, longer than X amount a month, it might make sense to do it now, or it's
Sure.
better to wait till we get to X.
Yep.
So
Yep.
yeah, I think there's that. And then the other question I'm getting is, are we getting inflation number? Like, are we going to get an inflation surprise that's going to negatively impact rates given we got this shutdown and the data's not flowing?
Well, I mean, even when the government wasn't shut down, we got surprises. So I don't know that there's
Point.
there's
Yeah.
a good there's not a good answer. I think, based on what what they're projecting is flat,
Yeah.
whatever that means. Who knows? It could come up and be way low. It could be way higher. Play the cards that are in front of you at that point. Obviously, if there's a miss to the high side, then you're going to see rates kind of go back up, and
Yep.
that's kind of goes back to the window, like being able to take advantage of the opportunity during a certain amount of time, because once the 10 years hovering around 3.99 right now. If that creeps back up to 4.25 because we got a bad inflation number, well, that takes a lot of people out. Then
Yep.
you're moving up 7.25, 7.5 before we can even think about a rate and term. So I don't know. I think the biggest thing is having a mortgage plan in place and talking to your loan officer and really understanding what the math looks like. That's
The
the
other thing I
biggest thing.
wanted to, sorry, to cut you off. The other
Mm-hmm.
thing I want to talk about is the what we're seeing from a appraisal standpoint, right?
Mm-hmm.
With a softening of the market, which we're seeing here in California. I know you guys are seeing
Mm-hmm.
it in Texas and other markets that
Yeah.
we're in. Like, what? I mean, I guess how can we better prepare customers for what might be? I mean, I'm certainly having a number of conversations and even looking at realtor.com on what the estimated
Yeah.
value is. Where there's a gap between what is the perceived value of a property and what it'll actually appraise for.
Yeah. I mean, I saw a stat today. If you look back from COVID days to today, Austin is 25% below
Where
that
they were.
number.
Wow.
So if you bought a place in 22, your place is worth 750 today, according to the math. So yeah, it's super important on the rate and term and the cash out, because you got to have a good understanding, and that, appraisals are coming in a little softer due to the market conditions. There's a lot of inventory. And so, just having a conservative look at value is important, because it will mess up a deal really quickly because
Yep.
your loan to value is driven off of that appraised value. And so if we're, thinking we've got this place that's worth, 700,000 and it comes in at 625, I mean, that could really, that can mess things up quickly. So it's good to have that conversation up front, know that
Yep.
that's a potential possibility, and have a good conservative look at that value.
And I would say, when we comment on this type of stuff, I mean, we're not incented one way or the other to say, hey, you're lower or higher. We just want to ensure that the property is going to appraise, so we aren't dealing with a derailed deal because appraisal comes in way under. So the conversation on the front end, like, hey, are you sure? Like, we want to be certain, because that appraisal is going to happen and what they say goes. So we're just trying to make sure everybody's on the same page.
Yeah, and there's a cost to that appraisal, right? And we don't want to, if we don't think the deal can get done because the appraisal is, suspect, so to say, in this case, or soft, then we're just not going to move forward, because I don't want to spend your $1,000, $800 to get an appraisal. So that doesn't do anybody any good. So it's I got a couple right now that we're like right on the verge, and it's just a matter of like, hey, do you want to throw $800 at this thing to see if it works or not? Like,
so you want to be conservative.
Mm-hmm. Absolutely.
All right. Well, good update. I would say those out there, I mean, the vast majority of what we're seeing right now, cash out refi, people that want to access equity. Mm-hmm. We have great HELOC products, with great second mortgages, close-end seconds, cash out refi. If you're in the market and need to access equity, get in touch with us. Let's get the process started and at least start talking numbers and what might make the most sense for you. And we'll keep you updated as we learn more as far as the lockdown, inflation, and all the numbers that go around and impact interest rates. So we'll be back next week with a fresh look at things.
Monday should be an interesting day.
Yeah, it's going to be an interesting day. When do we have CPI?
Friday, and then Fed meets next week as well.
And that happens regardless of the shutdown?
Fed, yes, correct.
Yeah. Okay.
Mm-hmm.
All right. Yep. So we will have some new data to look at. So we will have a fresh update. We'll be back next Monday. As always, thanks for tuning in. Reminder, give us a like, give us a subscribe, leave us a comment. We look forward to hearing from you. Gary, thanks as always for the information. We'll talk to you soon.
See ya.
Take care.